they are. They always seem like a boondoggle, but what can you tell us?
Yeah, and it's the entire idea of using muni bonds to finance arenas, to finance stadiums. It's for professional sports. It's a controversial topic in munis, and we don't have many juicy, controversial topics in munis. But if I could, just as far as two quick background points before getting into how you could profit from it. One is when you have local officials and state officials want to go in and use taxpayer dollars and use muni bonds to put together a stadium or an arena, it's with a thought that it's going to go in and spur economic growth. It's going to spur jobs. You're going to have bars and restaurants come into an arena district in Columbus, Ohio. You're going to go in and have all this knock-on effects.
And it can often work.
And it can often work. I mean, the results are mixed. I mean, you do have like Cobb County that clearly has benefited from moving the Atlanta Braves and going in and having the knock-on effects there. And there's some that don't work as well. But the other thought is that when you think of stadium financing, it's not for the scoreboards. It's not for the different parts in the actual arena or the stadium, the luxury box. It's all the wraparound financing. So the Chicago Bears, my Chicago Bears, are asking for $2.4 billion for their new lakefront stadium. And
when you say asking for, is that from the market? Is that from public subsidies?
Yeah, it's from public subsidies, from ultimately issuing muni bonds for these. And it's for public transportation. It's for putting in a new road. It's for putting in greater utilities, water and sewer. And as you mentioned in your opening, there are 13 billion being asked for by 12 different cities. And we're going to see, I think, more issuance coming from this in the coming year as these become more expensive.
And it's tricky because a lot of the fan base loves it, right? I mean, who wouldn't want a great stadium, a great experience? We all complain about getting back and forth to games and that kind of thing. But is it a good investment?
Yeah, and I think that's what we really focus on our most recent paper is the difference between the perceived risk that your team has to do well. My Bears won 5 games last season. It's very difficult to go in and to watch this and say, gosh, I've got to make sure my team's doing well and people are showing up, versus the actual risk. And the actual risk these are bonds that are generally very high grade. They are Buffalo.
Meaning higher risk.
Well, high grade on this meaning.
Oh, no, high grade. I'm sorry.
Yeah, I mean,
not high yield.
Yeah. So if you look at the Buffalo Bills, they just issued $500 million of debt, and that debt all came from a AA county that is a very, in our opinion, a low risk. The Tennessee Titans just issued $750 million in debt from the city of Nashville. Again, we think very low risk. And so that difference between the perceived risk of you have a project finance and it's got to do well and your team has to do well versus what the actual risk are of, in the case of Tennessee, the state came in for a $500 million issuance of a AAA rated entity. The actual risk is much different. And so you can really profit from going in and buying these on new issue because there is that difference in what is being financed, which is stadium and assumed to be risky, versus what it's actually backed by, which is sales taxes and general obligation
Not to make
bonds.
the analogy, it was kind of like mortgage-backed securities, right? You think, well, I don't want to back any homeowners risk, but if the government is basically going to backstop the default, then I can. So the strategy, you think, is actually to buy some of these on issuance because it's when they get the headline risk. There's a lot of concern. Maybe they have higher yields because of that perceived risk, but in reality, they're often backed by the stronger state and local government.
Yeah, that's exactly it. And we looked at, for instance, the Buffalo Bills. They issued $500 million of what they called Bills bonds. And again, that's from the local county where the stadium is built. We looked at other 4% coupon structures that were already outstanding for the same full faith and credit of that county. And we found that you picked up on this new issue about 35 or so basis points. Same with Tennessee. The bonds backed by the AAA state of Tennessee, when they were going and issuing these bonds, there again was this perception from the retail market.
But I think about Chicago. I mean, I don't want to bring Illinois into this, but not every state is AAA rated. And does that mean in those markets, people should just be aware of who's the ultimate backer of this?
Well, and for Illinois, let's say, for instance, there is an actual issuing authority by the state, and it is backed by sales tax bonds. And even in the heart of the pandemic, when hotel occupancy was down 80–90%, just given how much funds were in indentured held funds, given how much over collateralized they were, you didn't have those defaults.
Very interesting. So Dan Close says it's okay. It's okay. You can help fund your local stadium build out. No, I don't want to put words into your mouth, but I do think it's a good context to think about this weekend. I appreciate it. Good to see you again, Dan. Thanks. Dan Close with Nuveen. Sportsbooks are also getting ready for a record $1.5 billion worth of wagers on the Super Bowl this weekend. You're going to hear from a lot of the the betting CEOs. FanDuel, DraftKings, Fanatics Betting, Caesars, BetMGM, they'll all be on throughout the day tomorrow. We'll get to field a ton of different questions about this. It all starts on Squawk Box at 7 a.m. Eastern. And still to come, Amazon's at an all-time high this week ahead of their results tonight, while the firm has surged off its recent low, and Expedia is coming off its first monthly decline since May. We've got the numbers and narratives to know ahead of these earnings reports next.
Muni Money is sponsored by BAM. Help build America's future with BAM-insured Muni bonds.
Infrastructure makes our economy grow and keeps our communities strong. And now's the time to build. BAM Mutual protects municipal bond investments that finance essential projects, providing an added layer of security to improve your portfolio with guaranteed income that helps investors reach their goals. Invest with confidence. Build a better portfolio with BAM-insured bonds.